I want to talk about the euro today. I normally do a weekly report on a variety of currencies, and I also look at the Nasdaq and gold and a couple of commodities. But today I'm just going to focus on the euro. Now, in order to set the scene for the euro, I want to have a look at the dollar index. The dollar index is just an index which measures the performance of the dollar against a basket of other currencies. And the euro is the main contributor to the dollar index. So it's important to look at both of them in order to provide the context for any analysis on the euro. Now, this is the dollar index. And you'll have seen in some of my videos and tweets before that I expect the dollar index to drop down towards some of these support levels. Now, we've reached the first one, and we've bounced off it with some sort of concern for dollar index shorts, because we've got a tweezer bottom right here against this first support, and this first support is formed by this high going back into around about the middle of May this year. So that's the first obvious support area, and even though we're below this 50 period red moving average, that's the 50 simple moving average, and this is a daily chart, we've bounced back up to the underside of the 50 period moving average. However, having said that, we are in a downtrend. We've got lower highs. There's a lower high than the previous one. There's a lower high, and we haven't broken above that high just yet. And we're also below this green line, which is the 20 period simple moving average, and we're below this blue trend line. So we're still technically bearish on the dollar index, which means bullish on the euro. And that's all I can say about this really at the moment, because if we do manage to break up above this 20 period moving average and above this trend line, and then more importantly above this recent high, which is at about 107 or just below that, 106.80 or so, then we're in either for a range bound period again, and we've had quite enough of that, particularly in the euro, or we're going to move back up to test these highs again. I don't know which is going to happen. A lot depends on the way the economy pans out and the way the stock market reacts to things like CPI, interest rates, commodity prices and gold, and macroeconomic situations that are going on. So that's the dollar index. I think for now we're still bearish, but I'm concerned. And the areas to watch are this 107 level where this previous high was. And if that is the case, if we reach back up there, we'll have broken through the downward trend line and this 20 period simple moving average. Having said all that, let's go and have a look at the euro. All right, so I've drawn some lines on this euro chart. This is the euro daily chart. And it's kind of pretty simple, although not clear which direction we're going to go in. So we've got some pointers at least. And you'll know that I've been aiming for a move up to 106, somewhere around 106, this high over here, and then back up to 108, not 106, 106, 1.06. I'm still thinking of the dollar index. Actually, the numbers are pretty similar, funnily enough, which is coincidental. So 1.06, 1.08. Now, we had this long period of consolidation, and I did send out some info last week saying that if we break up above this consolidation area, which lasted more than 2 weeks, and we were busy range trading this for most of this period, waiting for a breakup either up or down. It happens that we broke up, but we met firm resistance at the downward trend line, having just poked through it, and this 50 period moving average, which is moving down along basically in line with the 50 period moving average. So we've reached back up there, and we haven't managed to move higher. Now, this is obviously a resistance level formed by this previous low, these two, the sort of double bottom low, and that's why it's quite a significant resistance level, because it is a double bottom, and it's also a Fibonacci level of this move down. And so we're just finding quite a lot of difficulty getting above there, which is concerning for dollar bills. I'm going to remain on the bullish side. I could be completely wrong. I just want you to know that I'm not married to this view, but it's my favored view at this time. Now, we've got some obvious levels that we need to watch out for. I've drawn a Fibonacci on here from this low to the high that we reached during the last couple of trading days. and we've rejected there with a double top on the hourly chart. You'll see that on the daily chart it just looks like a tweezer top almost, not quite a tweezer top, but pretty close. We've rejected there, and we've moved down, and I've been buying at 103 or 102.80, and then I've got another order in to buy at this support down here, at around about this retracement level, this Fibonacci level. That's the 38% retracement. It happens to be where this lower channel line or trend underneath the price, the lower trend line part of the channel, and the 20-period moving average and the Fibonacci, they all meet there. Now, we did have quite a strong move down after that rally on Friday, but we kind of ran out of gas halfway through the session, and we moved down, looked for love of money that we were probably going to try and test this lower trend line support and the 20-period moving average, but we didn't. Now, what's interesting about this chart as well is how beautifully we've held above this upward curving now 20-period SMA, and we've held above these Fibonacci levels down here. Now, we'll have a look at the hourly chart shortly. I've got a channel drawn in here. So the lower trend line, I've just duplicated that, made a clone or a copy, and just moved it up. So the top of this channel is there, and the bottom of the channel is the trend line, the upward sloping trend line. So technically, we still have a bullish trend in place from the bottom, but it's not looking strong. We do have higher highs and higher lows, but it's looking a little weak. But as I said, I'm going to continue to hold to the bullish view as long as we hold crucially above the bottom of this range. That's the important level. So if you are buying, buy into dips. If we break through this trend line, you might have another go down here at the bottom of this horizontal support range, which is denoted by these two dark lines here. And that's the range which has been prevalent really for the last 2 weeks. Targets. Now, that target one is very obvious and clear. It's by the time, if the price reaches up somewhere there in the coming days, it will be the top of the channel. And it also happens to be the 78.6% Fibonacci of the move down from 108 down to around about parity, which is what we saw kind of mid-July. So that area there, the 78.6, is always my favorite Fibonacci level. And if we do get up there, well, that would be great. That would be a very good confluence of the 786, the top of the channel, and this previous resistance at 106. Second target is also pretty clear, 108. That's the top of this move down. And also by then, the 200-period moving average will have moved down towards the same level at 108 or 108.50. So that 200-period moving average is really important in long-term trends. As long as we hold beneath that 200, we're generally in a bearish trend, and but we often revert back to it as a mean reversion kind of target. So if we are going to revert, at least for a medium or short-term rally, back to the 200 MA, it'll meet this resistance level at around target 2, which is about 108. So that's my plan. Now, I could be wrong, and I'm quite open to being wrong. As I said, I'm not married to this idea. Therefore, I need to have stop losses in place in case I am wrong. And the obvious place to put a stop loss, as I said earlier, is beneath this lower part of the range. I must mention at this point that ideally, in the beginning of an uptrend, in the start of a trend, we don't really want the price to, as I said, ideally, we don't want the price to move down below a 38% retracement or a 50% retracement, denoted by this line here, actually, where the 20-period moving average is, and the trend line. That's the 38% retracement. So that's why I have orders in over there. And then the 50% retracement is a little bit lower, which means we will have broken down through the 20, broken down through the trend line, but we'll be above the range high. So that's my idea. It's simply, as long as we hold above this range, this is the crucial level. Ideally, we'll hold above we'll remain bullish. Ideally, we'll hold above the trend line and the 20-period moving average as well. And then we'll move up to break through this double top, break through all this traffic above us, the red line, the red horizontal line, the top of this move, the downward trend line, the 50-period moving average, and we'll start to move up into target 1 and then eventually target 2. If we don't manage to do that, what's going to happen? Well, I really don't know. We could resume a medium-term bearish trend and move back down to these levels. We could get to the 78.6. It'd be worth trying another long there. We'll have a look at that as we get closer to the time if it happens. And then, of course, there's a chance of a double bottom at around parity or just below where we bottomed out last time in July. So that'll be a crucial area. And then if we break through there, you know, it's very, very difficult, but we could just get a spike down and back up again. In other words, a false break beneath the low, or we could get a continued move, significant move down in the euro down to 0.96, 0.95, 0.94 before looking to create a new bottom. So really tricky trading, and the trick to do this is to either trade within the ranges, be nimble, be quick, be prepared to be wrong quite often. Make sure that your targets in trades that you enter are somewhere around double the size of your stop loss so that you've got a good risk-reward ratio. Keep your stops tight, don't over-leverage, don't commit too much to the position. I've committed to this trade with half of my position at the current price, just below 1.03, and I've committed the other half to this area here, with a trend line and the 20 SMA. I'm really hoping that this 20 SMA is respected again. It's been good for the last week or week, maybe even 2 weeks. It's curling upwards. It's acting as a good support, good base. And with a bit of luck on Monday or Sunday night when the market's open, it's Sunday afternoon now, we'll begin to move up from here, start to test these highs from late last week and move up towards our target. So once we get through here, I must just say, if we get through this little double tweezer top, if I can just switch to an hour chart, I'll show you what that looks like on the hourly chart. If we can get through there, there it is there. I want to get rid of these. I don't like them. I had them in there for a little experiment that I was doing with candle patterns, but they're annoying. Let's get rid of them all quickly whilst we're here. And they're quite useful for some reason. If you like trading with candlesticks, they're just part of the software. They act as a reminder. So there's that double top I was talking about on the hourly chart. We didn't quite reach up to the previous high over there, but we got pretty close, and then we moved down, and then we that was the rally on after the CPI news, and then we've just dripped. That was on Wednesday, and we've just drifted down since then. A big move down quite late on Friday afternoon, and then a little bounce from there. It's not looking particularly strong. There's our levels beneath us where I'm going to be rebuying. We're only about 20 pips or so below my entry level, so it's really nothing to panic about at all at this stage. And like I said, keep your stops tight, keep your positions reasonable, and we want to go back to the day chart. Now it's hidden by this video. Let's see if we can get this on here. That's the 4-hour chart. You can see the same sort of thing on the 4-hour chart. Actually, there's the double top, and you can see the same trend line and the same moving averages on the 4-hour chart. Actually, it's quite interesting on the 4-hour chart. Not only, remember that on the day chart, this is the 20 SMA. We'll go back to the day chart shortly. But on the 4-hour chart, we've got all of the moving averages apart from this 20 period. We've got the 50, the 200, and the 100, and the trend line and the Fibonacci level all together there. So I'm hoping that this area, if we do touch down a little bit further, it's possible we could move further down in the Asian session and then bounce back up again after that. But this looks like pretty good support. So I'm sticking with a bullish view. I'm not married to it. Let me just repeat. It's just my girlfriend at this stage. We're just dating. And it's kind of like the first date. So if we can get up through this area here, this double top, then we could get a little bit more serious. Now let's see if we can get back to the day chart. And, well, we can't. All right, so the reason is because the video recording is covering the selector for, and I don't know which one, maybe it's this one. No, that's not the right one either. Let's stick with the 4-hour. That's good enough for now. Okay, so that's the plan on the euro. I don't know how you're trading it. There are two ways you can approach this. Like I am, you can take a sort of a medium-term swing trading view and take the trade at 1.0280, a little bit lower down at 1.0220, that sort of thing. Looking at those levels I showed you earlier on the video on the day chart, where that 38% fib is, where the 20-period moving average is, where the trend line is, it'd be a great place to buy. You could now buy it where we are right now, at the current price really, and then look to rebuy it a little bit later. Small positions, be cautious, and stops below this ledge here, this precipice, which will lead to a drop down possibly into the 78.6% fib, and even the recent low that we saw in July. Well, good luck with that. I hope that gave you a perspective on the euro. Please like and subscribe and all that sort of thing. Really helps. I don't do these videos for any other reason apart from just to share my passion and my interest in the currency markets with my viewers. So I hope you enjoy it, but help me out. Just click on those things on the page, like, subscribe, comment if you want to, and I'll speak to you as the week goes on. Catch me on Twitter as well, because I often update intraday trade ideas on Twitter. All right, take care.